Welcome to the One Hero podcast, where we answer Malaysians' burning questions about personal finance with fact-based answers. In the last episode of Financial Audit at the One Hero podcast, we took a look at Salene's finances. She's a 20-something account executive making about 4,000 ringgit a month and a big saver, keeping up to 2,500 of her take-home. But most of her money is in FDs, which limits her wealth from growing even more. She hasn't gone beyond FDs because of the risks and uncertainties involved. So in this episode, John will be helping Salene understand different asset classes outside of fixed deposits and hopefully help her gain confidence in investing in asset classes that give her higher returns. Before this episode, John asked Salene to study asset classes like mutual funds, real estate, investments, equities, and crypto. To see if what Salene thinks about these asset classes, we'll start with a fun quiz. So Salene, are you ready?
Wow, getting nervous, but okay.
No pressure, don't worry.
No pressure.
This is just to warm things up because we don't want to just come in and, Salene, explain to us everything, right? We just want get to know what you think overall. Just an idea of what your general view of everything is like, okay? All right, don't worry. No right or wrong answers, just whatever is your opinion is the correct one. Okay?
Okay.
Right,
No judgment calls here.
no, we're not wrong, correct. Last give you a grade.
Yeah.
Don't worry. It's not like that. It's just for John, also for me, the audience to get a view of where you stand right now. Okay?
Yeah. Oh, sure.
All right, so just 3 questions. So the first one is, out of all the asset classes that you have studied, which do you think is the riskiest one and why?
I feel like the riskiest one is cryptocurrency, because it's fairly new and there's no law to help regulate it.
Okay.
I think, and the other one is NFT. I think NFT belongs in the crypto industry.
Okay.
Hmm.
Okay. If besides it, in a way not being regulated, right? Why do you think it's attractive for people? Why do you think it's attractive for people of your age?
I think it's attractive because they will think is buy fast, sell fast. You can earn the difference. I
Okay.
think that's where people want to like faster earn. They want to earn more like at the short period of time.
I see. Okay. Which one do you think you need the most money to start with, Louis? Of all the different asset classes, real estate, crypto. I think crypto you can start even with $10, right? But between these different asset classes that you've read, which one do you think you need the most amount of money to start with?
I think it will be properties.
Okay. For your area where you stay, if you were to buy, most of your peers who are buying houses today, what are the property price ranges that they are buying? 500,000, 600,000 kind of property, or 1 million?
For my peers, they buy around like 300 to 400.
I see.
Around 300, 400. Usually is condo.
Around the island area or more towards the mainland area?
Some is buying the island area. I think the island area, the area is not that nice. But I got one friend who's buying near my area, my house area is about like 300K. Yeah.
Wow. Is it a big unit, a small unit, like 1,000 over square feet, or like?
If I'm not mistaken, it's around 900 square feet.
For 300,000, yeah, that's quite reasonable. Okay. Now, which one do you think you can make the most money with, based on what you've studied? Properties, crypto, unit trusts, stocks. Which one do you think you can make the most money from your just basic reading?
For my basic reading, I think it would be stock.
Okay. Why? Why do you think?
firstly, I don't have to pump so much money into buying properties.
Okay.
And second thing, if I were to invest in property, maybe I need to manage more of my time to find people to rent my apartment and everything.
Mm-hmm.
So, but through stock, maybe I just have to look through my phone, see how the market is working, when are they going to out the dividend and everything.
I see. Okay. Which one interested you the most? Because obviously, prior to this episode, you text me and you said that, hey, you want me to discuss about crypto. So I'm guessing it's crypto that intrigued you or excited you the most. Is that right? Or am I making a wrong assumption?
Uh, I'm not really into crypto. I'm just curious about crypto.
I see.
Because I feel crypto is the most risky. I don't think it would be the first step for me to go into investing.
Yeah, if you want to lose a lot of money, yeah, you can. No? Excuse me here. Okay, great. So Louis, do you have any further questions for her actually at this point?
Yeah, also like just some reverse questions there. Like, okay, so properties you think require the most investment, right? So how about the least investment? Which one do you think you need the least amount of money to start with?
The least amount I think would be stock for me, or maybe unit trust. Unit trust is because they combine a lot of people into one pool and then they only invest in a company.
Yeah,
So I believe you have how much amount of money you can put in is depend on your capacity.
Like I think a lot of the unit trusts are structured in the way you can pay like 100 ringgit a month, that kind of thing, right? You're thinking about. Yeah.
Yeah.
The other reverse question, right? Okay, so John asked like how much which asset you think can make the most money with? What about the least? Do you think the least, or you think you will lose a lot? Is it crypto? So,
Yeah, the question from Louis to you, Salene, is of all the asset classes, which do you think you will make the least amount of money?
I believe it'll be crypto.
Okay. Meaning because the risk is so high, then the likelihood of you losing money there versus making money will be high. Lah.
Yes.
Okay. So good. Any more questions, Louis?
no.
Okay, great. So let's start with if you were to start a portfolio today, and let's just say you're going to start with 5,000 ringgit, right? What do you think? How do you think you should go about evaluating which asset class to start going into? And I'm going to ask you based on, think of, I know we don't have a screen, we're not sharing the screen, but for the listeners out there, think of it as a pro and con list. We're going to come up with a pro and con list. So I'm going to ask you a few questions, and you let me know from your assumption, Salene, which one do you think is the answer for it? Okay, so let's start with property. Okay, let's start with property. Yeah. Do you think the upfront allocation or the initial amount of money is it going to be big or small?
It's going to be big.
Okay, for a 300,000 property like your friend who's buying either for staying or for the rent, right? Do you know what are the things required for an upfront investment plus the other ancillary costs related to it? Are you familiar with that?
I know a bit.
Okay,
Firstly,
please.
you need to put in your deposit
Okay.
to book the unit that you want.
Okay.
Second, you need to provide down payment because you can't. I think down payment is something like deposit, is it?
Deposit is to book the unit, but the down payment is actually a portion of the property price. Yes, purchase price. Do you want to take a guess how much is usually the minimum down payment requirement?
I'll be guessing around 20 to 30K. It depends on how much loan you can get, is it?
Yeah, usually it's about 10% of the property value. So let's just say if the property is 300,000. So the deposit, usually, let's say you put an earnest deposit, usually they put 1%. 1% is 3,000. And then the moment you put in a down payment, it will be net off. It will be net off that 10%, usually. Because
so
you have
the
to pay.
remaining 9%.
Yes, yeah. So Then after that, what else do you think what are the things that will incur costs related to a property purchase?
First thing is your insurance, your housing insurance,
Okay.
and maybe like the lawyer fee,
Okay. What else?
because you need to have a middleman between you and the developer.
Correct.
I think so far is the way I know it is these few stuff.
I see. I see. When your friends, you said that the friend that bought the 300,000 property, did he or she actually share the process with you?
I really know the starting process because I help him with the booking.
Ah, okay. So great. Usually, for a initial property, your first property, you can usually get up to 90% loan, depending on the status of the property, because certain properties are commercial properties. The bank may not want to give you even up to 90%. They may only give you 80% or 70%. Then you have to fork out the other 30 lah. So the down payment is one, that 10%. Okay. Second thing is like what you rightly pointed out, the lawyer fee. And lawyer fee, there's a few, One is the S&P, the sales and purchase. There's one, the lawyer fee. The other lawyer fee is there's actually a loan agreement, because once you take the loan, you're dealing with the bank. So there's another lawyer fee. So usually some of it they will absorb, some of it they won't absorb lah. Because they want to attract you to come. Come Salene, buy my property. I give you free legal fee. But you have to be very clear. Legal fee for which one? S&P or loan?
Oh.
Okay. Then the last one, which is also a very big chunk. No, the second last one, sorry, which is actually a very big chunk, is what we call a MOT, or Memorandum of Transfer. So what it means is that you have to pay tax, property tax, for you to transfer the property from the developer over to your name.
Whoa.
Yes, that's usually the first 400,000, I think, is 14%. And then the next 400,000 and above, there's another tier 1% each. I can't remember. I mean, like, I used to invest in all this, and I used to remember, but now I've left property investment more than 8 years already. So usually for 4 to 500,000 kind of property value, you usually have to pay an MOT of roughly about 25 to 30K.
Wow, that is a lot.
Yeah. So how you look at a property investment usually is 10% down payment, legal fee plus MOT. It should be about 15 to 18% of the property value. That cash you have to cough out upfront. So if it's like 300,000, then you just 20%. 20% of 300,000 is
60%.
Yeah.
60,000.
Correct. That is standby money you have to.
Yeah.
So clear so far?
Yes.
I mean, what are your feelings so far? You look a bit shocked.
I expect like it could go, the down payment will be around 20 to 30K only.
Mm-hmm.
Yeah,
Then
but-
after John explained it, it's like almost
eye-opening,
100K.
So let's just say if you buy a property that's 500,000, you multiply 20%, roughly lah, give or take. So it's roughly about 100K if you cough up.
100K.
Yeah. Crazy, right?
Yeah, it means
Yeah, and this is, I'm assuming it's a new property. You don't need to put up renovation costs. You don't have to put up all the, and then we also discount the fact that maybe you have to pay the property agent a fee for finding. But usually new development, they don't have all that. But sub-sale,
but
there is.
you still need to prepare some money for renovation.
Yes. Easily about, there is another estimate, easily anywhere between 2% to 5% of your property value. Depending on what they give you. It's like condo will be less, then landed. A lot of people say, oh, in Penang, we said, it's you have to buy a property on the ground.
Much more value
more
according
value.
to them.
I think Louis and I, because we come from Sarawak, right, we are so used to landed houses. It's the reverse. We are not used to condo, and yet when I'm staying in KL, I love a condo because of convenience. So, yeah. So next, do you think that if you want to be a property investor, do you think the learning curve is going to be high on it? Learning curve meaning high, meaning you have to, besides learning what I just shared with you about the down payment, whatever, to buy a good property in a good location and to look at other things, do you think it's going to be a very long or difficult learning curve, or do you think it's going to be easy for you?
I believe it's going to be a very high learning curve because you cannot simply invest. Because at one, you buy one property, it's going to cost you about 100K. So you cannot like try and test it, your properties. If you try and test out your property, then you're going to lose a lot more money.
Okay. Okay, good. Next question. In terms of liquidity, meaning the moment you buy your first property, or even second property, do you think it's very easy for you to liquidate or not?
I don't think it's very easy for you to liquidate because not everybody can afford to buy a property.
Okay. And also, when you get a loan and everything, if your property buyer is a cash buyer, the fastest on average you can get is 6 months to 8 months. If it's a loan buyer, when you sell the property, you'll be lucky to get it within 1 year, the money. Yeah. So that means the day you decided to sell, you put up the notice, and then someone come and negotiate, deal. The moment it's signed, only then the clock starts ticking for 1 year, if it's a loan buyer. Because they have to get the loan approved, then you have the memorandum of transfer, all that kind of thing. It's about a year. Okay, liquidity. Next question. Based on what I just described to you about the fees, right? Do you think the fees are worth paying? Because you have to pay a lawyer, you have to pay a real estate agent, you have to pay a lot of this. Do you think that these fees are worth paying for investing?
In a way, yes, because in the end, the property belongs to you. So you actually have something to hold. Instead of like maybe if you invest in stock, the company close down and everything, you might not get back the money. But at least in real estate, you can still have a tangible property with you, like a house or anything like that.
Great.
That you can still use it even though you're not investing or to rent out or anything.
Great. Next, market risk. Do you think that property will have as much market risk as crypto, whatsoever, as the other asset classes? Market risk meaning volatility, prices go up, prices go down. What do you think?
I think from what I see, the house prices keep going up. It never goes down because everyone needs a place to stay.
I see.
The demand is still there.
Okay. So you're saying that comparatively, real estate compared to unit trusts or even stocks, it is less of a market risk, lah.
Yeah.
Okay, good. What about maintenance and upkeep between properties and unit trusts and stocks and crypto? Do you think your property, if you're going to keep it for rental purposes or even for your own stay, do you need to maintain and upkeep it, repaint, toilets broken, all that kind of thing?
Yes, of course. You need to, like every year, you need to pay assessment fee, your quick rent.
Wow. Good.
There's added like electric bill, your water bill, and maybe if you buy a condo, you still got the maintenance fee to give your what is it called?
Your joint management committee.
Yes, joint management. Yeah.
Okay, good. Next, in terms of diversification, do you think most property investors will have a diversification ability or not? People in your age, when you can only buy one or two, do you think you can get diversification or not?
I think it's highly unlikely you can diversify unless you have a lot of free cash. And maybe you can buy a lot.
Okay, good. Last but not least, what do you think is the biggest risk for a property investor?
Biggest risk is maybe that area is not good enough anymore. Like down.
Becomes let's say earthquake or flooded. That area suddenly becomes flooded. Then that's it. The value of the property just like
maybe they build some other new houses around your property. Then it doesn't look as fancy as before.
I see. Do you think that because property investors borrow money, do you think it's a risk for them as well?
Yes, it's a risk for them because they have to pay a fixed monthly payment to the bank for the loan that they obtain. Then during that time, maybe they can't rent out. So there's a risk they cannot cover their loan.
Okay, cool. Louis, any other criteria you would look at besides those that I've just mentioned for real estate?
Real estate. For me, I think when I listen to Salene talk about the real estate, it's mostly for personal stay, right? So far, I think it's not really for the investing side, like renting to tenants, that kind of thing, or creating some Airbnb. No, right?
Yeah, I have to ask Salene. Salene, when you were answering the questions that I gave you just now, was it more from a mindset of your own stay, or was it more for a rental property?
More for rental property.
Okay.
Rental property, okay. So if it's for rental property, I think there are other consideration. I would think like, okay, in like when you mentioned about I give you some personal examples, and I'm not a very big fan of buying properties because of many personal bad experiences. Like when you mentioned like prices only going up. Curious, like how did you get this like statistic, let's
Come
say,
to
like,
that. Yeah.
yeah.
Uh, uh, because I believe last time house is like around 400K. You can get like a decent house, which is like almost a bungalow already. But as now, previously, like long time ago, Bukit Batajam, the housing price is like pretty low. That's why a lot of people will buy around that area and stay there.
Correct.
Now, like near to Bukit Batajam, there's Batu Kawan.
Yes.
Yeah, one condo is like almost 1 million already for one unit.
Yeah, I think for those like certain areas, the prices will keep going up. But I think when you kind of like go outside of that zone, right, that's where the
Yeah.
prices actually don't really always go up. And one of it is like, okay, you mentioned changes in the landscape around that, and I share with you one very personal example. Very close relative of mine bought this one apartment. Initially, there was a nursing college beside that apartment. I think after 10 years, everything was going well. The prices went up for 10 years. Suddenly, the nursing college closed down, closed down. And then it closed down because there was like some scams in the certificate. Then the whole area, right, all the apartments deserted. The prices went down by 70%.
Oh,
Yes, one example. Another example is in my where I stay, like in Miri, there's a canteen here, the
In
university here.
university.
Yeah. So I think when I was still a student, about 12 years ago, all the houses there, right, wow, went from 40,000 to about 300,000 in 5 years' time. There was like, because all the students came, the cohort increased. But now, same house, nobody rent. Why? The university inside, right? They develop all the housing inside.
their own dormitory. Yeah.
Yes, and like by thousands and thousands, that it displays all the rental income from
The surrounding.
the surrounding, like houses which when I was in university, right, always full. The rental keeps going up for like almost 10 years. Just 2 weeks ago, I passed by all kosong one, for rent, like that. So I think for me, right, one of the biggest risks with property investing is that you may lack information around what may happen around the area, and and the assumption that price will keep going up can also make you think that it's always safe. So I just wanted to add that as ancillary comments about around there. Yeah.
Yeah. Thanks for sharing, Louis. So, Salene, Louis, I'll just go through again the criteria that I asked and this applies for all asset classes. So maybe, Salene, if you want to take notes, what is the initial investment? What's your learning curve? What's the liquidity? That means what kind of liquidity can you buy and sell? Do you think the fees are worth it? Okay. Market risk. What kind of market risk and volatility are you looking at if you're looking at property? As you mentioned earlier, and Louis added that for most properties, there is either a stagnation or there's an increase in price, or sometimes there is also a decrease in price because of supply and demand. So that's the risk that we have to look at. Third, the next one is actually maintenance and upkeep. Property, you have to maintain and upkeep. Diversification, because property is such a big lump sum, most people don't diversify the property. That means whatever money they have, they buy, they can only have one or two or three, unless you grow bigger and bigger and you leverage more. Okay. And last but not least is actually the leverage risk. Leverage risk meaning you borrow money, but you cannot rent it out, or the interest rate increases that your cash flow for the installment is actually even more expensive than rental. Then that's where you get into a little bit more of trouble. A lot of people don't have that kind of holding power, right? So like Louis mentioned about Curtin University, can you imagine for them, if they got it at 40,000, okay, but if they bought a property at 300,000, and then now there's no one renting, and then you're paying like installment, 300,000, you're talking about at least 1,500 to 2,000 a month, Yeah.
I can't imagine the devastation, because those places used to be completely full. Like you can't even get a place there, now empty, the whole road, I think hundreds of houses empty.
Yeah.
Hundreds of houses.
So you see the criteria I mentioned, use it for any asset class and to help you think which one you want to go in. Okay. I'll probably put it in the show notes to for everyone listening out there to think it out, think it through. Okay, so now we've gone past real estate. We're going to go into unit trust. So the same framework. Upfront allocation, Salene, big or small?
Small.
Okay, how much?
Maybe like 100 ringgit you can get.
100 for top up, yes, but usually the initial amount is 1,000 for Malaysia lah.
Oh.
I've not seen anything less than 1,000 to start.
Yeah,
but
1,000 to start. Yeah,
to start, but 100 to top up lah. Okay. Yeah. Do you think the learning curve will be high for this one, unit trust?
I think the learning curve will be low because there's, if I'm not mistaken, is somebody helping you to manage the investment.
Good. Do you think that he or she will sit down, teach you A to Z or not, Salene?
I won't. No.
So how do you know they are trustworthy? They know what they're doing.
Faith or trust or
faith.
question mark. Okay. Next, liquidity. Do you think it's easy to buy or sell?
I'm sorry?
Liquidity. Do you think it's easy to buy or sell unit trust? That means unlike property where, I mentioned earlier, if you buy and then when you want to sell, if it's cash buyer, 6 months. What about unit trust, liquidity? Is it easy to get in and out?
I believe so. I mean, to get in is quite easy because there's a lot of other platforms, like the bank also provides unit funds.
Correct.
So it's easy for you to get in, but I'm not sure about how you're going to get out. Yeah.
Do you have friends who actually buy into unit trust?
No.
Okay. Why do you think so? Curious.
Why do I think my friends didn't go into unit trust? I think my friends are more hands-on. They prefer to do things themselves instead of trusting a third party to handle your finance.
I see. Usually, where do they put their money? Stash away, direct stocks, or what?
Stocks. Usually in stocks, they invest in themselves.
Okay, good. Let's come to that later. Okay, next. Professional management and fees. Do you know how much, if you were to buy unit trust, how much fees you have to pay? Excuse me.
I'm not sure how much you have to pay, but I know It's like every transaction you need to pay for management fee.
Okay.
Or whenever you want to take out the money, you have to pay some kind of fee.
Okay. Okay. Good. I'll share with you. Actually, just so ironic. I was managing a client, EPF money. He invested about 300,000 in unit trust, and I was just sharing with him the fees. He nearly fell off his chair, lah. He didn't realize he invested since 2018, and he didn't realize. Okay, so there's usually two fees involved for unit trust. The first is what you call a sales fee or sales charge. That's upfront. It ranges anywhere between 3% to 5.5 and sometimes 6%. So that means if you invest 1,000 ringgit, 60 ringgit is gone for sales charge. Maximum lah. Minimum would be about 30 ringgit lah, 3%. Okay. Now the next fee, this is once off. That means every time you put in money, there's a service charge or a sales fee. Okay. Then every year for them to manage the money for you, there's this thing called an asset under management fee. Okay, this one ranges anywhere between 1% to as high as 2%, depending on which fund you go to. This one is recurring every year. So if you're putting in 1,000, then they will charge you, let's say 2% will be 200 ringgit every year to manage the fee. This one recurring. Okay, so far?
Yeah.
Yeah, usually these two fees. So the asset under management fees, this one recurs regardless of whether you make money or don't make money. So that means if
the asset management fee.
Yeah, asset under management fee. So if you lose money, they will still charge you that 1.5, 1.8 or 2. But if you make money, they will still charge you lah. But if you lose money, they also charge you. Okay?
I know when you are going to get charged.
So sales charge anywhere between 3 to 6% once off, and then asset under management fee recurring every year anywhere between 1.1 to actually 2%. Okay, clear?
Yeah.
Okay, next, market risk. Do you think unit trust has more market risk or volatility as compared to property?
It's more versatile than property because it's much more liquid than property lah. I believe.
Okay.
Because it's similar like investing in stock, but it's another person helping you to do the investment.
Okay, great. Do you think you have control with unit trusts versus that of stocks or properties?
No, because usually it's the person is helping you to invest in the market that they think is profitable.
Okay, good. Maintenance and upkeep versus that of property, less or more?
Less.
Less. Virtually, the upkeep is for you to do filing on your annual report lah. Correct? If they do file the annual report lah. Okay. Next, diversification. Do you think that with unit trust versus property as an asset class, do you think you get a better chance at diversifying your allocation, your investment?
Yeah, I believe because they have to diversify their risk also.
Okay, great. Next, do you have leverage risk? Do you think that you will have, because you don't take a loan, do you think you will have a leverage risk versus that of property or not?
I don't think you have any leverage risk. You only lost on the amount that you invest in.
Okay, great. Okay, next. Louis, anything to add, or you have any other questions?
Just wondering about the fees. Salene, what do you think? Are those fees fair? Do those fees sound fair to you?
I mean, in a way,
Under management.
this is how unit trust earn in a way, and they help you manage your investment. So they have to have something in return for them.
Yeah.
So you think for you it's fair, like it's a fair fee to pay? I mean just personal, yeah.
Yeah.
Okay, cool. Any more questions, Louis?
No.
Okay,
just
great.
curious about that, yeah.
Yeah, I think it's a great question that you brought up, Louis, because I would dare say 9 out of 10 people that I've met who subsequently become my clients, they don't actually realize the fees. Yeah.
Oh, really?
Yeah. You'd be surprised. I was surprised. I was very surprised.
Yeah, for me, that was the first and only thing that put me off unit trust.
Ah,
Too many fees. Yeah.
yeah. Actually, to be fair, there must be certain fees charged. They
Yes,
cannot
yes.
do it for free for you. But the question maybe is what is reasonable and what is fair, and is it
Mm,
incentivized for the fund manager of that fund to actually help you make money lah?
I think for the right fund, definitely. But some of the funds, not really, not all funds, not all
Yeah,
funds. I think it depends on the fund. We have to be selective on who we pay those fees to.
exactly. Okay, next. Stocks. Since most of your friends are in it, Salene, let's start from the top again. Upfront allocation. How much do you think you need?
I believe quite high because you need a minimum amount to invest. Like they got, if I'm not mistaken, they got like one block like a stock. Then inside you is how many amount of shares. Then you need to multiply by the share price.
Ah, very good. What is the cheapest share price you've ever seen in Malaysia so far?
I don't really go into the investment market, so I'm not really sure.
Okay,
But I believe it's around like 2.5.
ringgit, is it?
Yeah.
Okay. There's actually shares that are like selling for 1 cent actually.
Oh.
Yeah, 1 cent, 3 cent. Got. So you remember just now unit trust you say it's 1,000, right?
Yeah.
To start. Shares you don't even need that high. 300 ringgit also you can start already.
Oh.
Yeah. It's based on exactly. It's great that you brought it up. Is the amount of blocks or shares in a block multiplied by the share price. So prior to the year 2000, one block of share, or what we call it one lot, you have to buy a minimum of 1,000 units. Okay. Now you can buy a minimum of 100 units only, one lot.
Oh. Last time is 1,000. Now it's
Last time is
100.
1,000. Now they bring it down to 100. In the US, you can even buy one share.
Oh.
Malaysia, you can't.
Malaysia, you have to buy one lot, right?
One lot minimum. You can buy one share, but we call it an odd lot, ODD lah, like odd lot lah. And the odd lot buying and selling, the price is different from the normal bought lot. So the normal bought lot is 100. In the past, it used to be 1,000. Okay.
Mm-hmm.
Yeah. And then in the US, they even practice fractional shares. That means you can buy 0.1 0.1 share. Yes. Interesting, eh? Malaysia, we
Yeah.
don't we're not that advanced yet.
How they manage that fraction of shares?
Yes. So like I invest in the US, and I reinvest all my dividends, Salene. So I actually get 0.1 or 0.12 shares of companies that I invest in, because the dividend they give you $10, $12, so they reinvest, then they have to buy the fractional shares.
Oh.
Yeah. Well, Malaysia, we don't have that yet. Okay. So normal bought lot is 100. Odd lot, you can buy one share or 10 shares. Okay. Now, learning curve. Do you think this has a steeper or a less higher learning curve as compared to unit trust and properties?
I believe it's higher than unit trust because unit trust you don't have to manage yourself, and definitely lower than property.
You feel the learning curve is lower than property. Interesting. Why?
Property, you need to know the area before you buy the property, and then like you need to see the future developments, whether they're going to build industries, or they're going to continue with housing development, or maybe they're going to build like commercial slot, like malls and everything. Maybe you need to see what they're going to, maybe that land belongs to the developer, so maybe you can know what they're going to build in the future.
I see. So you think that is more difficult than stocks lah, to understand the infrastructure development and all that kind of thing lah.
Yeah.
I see. Interesting. Okay, we'll come back to this. I definitely have my opinion to share. Liquidity versus that maybe of property or unit trust. You think it's easy to get in and out?
Yes.
Okay. professional management is yourself lah, because in a way you're right. There's a question sometimes that we have, Louis and I have in TikTok, is like, how do you find a good broker? Because they expect the broker to give you professional advice. Hey, Louis, I've seen people who invest, they actually trust their broker so much that the broker tell them buy this or buy that, or they'll buy based on what the broker tells them. Seriously.
I know that, like, I know that very, very well, because a lot of my dad's friends actually went bankrupt that way. Because in the 90s, right, you actually
Yes.
called your broker, so he handled
Correct.
about you as a developer. I think
Correct.
a few million ringgit in
Wow.
the Kananga account, gone. Fees, whatever shit inside, gone.
Gone.
Wow.
Yeah, I went bankrupt. Suddenly he needed the money. Not only one case, by the way, many cases. Like so broker. That's why when my mom was doing it, right, she was always telling me as a kid, you know, like, don't trust your broker, do it yourself, like that.
Actually, thanks for bringing that up, Louis. Now, maybe for Salene, who's not familiar, have you heard of a broker?
Yeah. They're
Okay.
basically the salesman for your shares.
Yes. How do they make money? How do you think they make money?
Where you decided to buy the share means they already make the sales.
Commission of the sales.
Yes.
Okay. So they make not just from you buying, you know, they also make from you selling. For any trade, they make money. Whether you buy, you sell, they take a cut out of it. Now, if you are like a proper value investor, you only buy and you keep for a very long time. Do you think they're happy?
Of course, no. They have lesser transaction now.
Correct. That's exactly the point I'm trying to highlight, which is you look at the incentive structure of a broker or a dealer, they make money only when you have trades. So obviously they want to generate as many trade ideas as possible for you so that they can make a commission off the trade, whether you make money or don't make money.
Yes.
You see? So the broker may be good, but the incentivization structure is to benefit trades. So obviously he or she will be tempted to, you see what I mean?
Yeah, increase the trades.
It's always the incentivization structure that you have to understand, you see. Yeah, so I mean, I'm sorry to hear about Louis' friends, family friends case, but I've seen many people also bankrupt during that time, because you know how much the dealers and the brokers were making or not, Louis, in the 93 to 97. Okay, maybe I asked Salene and Louis. Okay, Salene, you give your number, Louis, you give your number. Per month, on average, how much were they making?
Per month.
Per month.
1 million?
Yeah, the top ones in KL can make 1 million a month.
Wow.
Yeah, the average ones will make about 200,000 a month. Average ones.
Oh.
Yeah, you know, like I literally, because like my mom has been trading since forever, like since like I think in her late 20s. Yeah. So she actually told me, right, of this broker. She used to actually also do that, where she would trust the broker. And in the end, she realized that, oh, something is fishy. You know, why is she randomly calling, you know, oh, you should sell this. You know, where the newspaper, right? My mom always tracked the prices, and she's like, according to my analysis, I don't have to sell it. You know, but she is insisting on it, and then she figured things out, it's because of the fees. And then over time, right, because she always dropped by the office, they kept upgrading her car, you know. So she told me, oh, okay, I understand now what was happening. Yeah.
Different car every visit.
Yeah. So I was like, I think in primary school, she told me that, you know, in primary school, she said, oh, you see that broker, happen. So never trust brokers, she told me that. And then I was still too young to understand, you know, but imagine my mom was telling me all these things. I still remember it until today. Yeah.
Trading,
Start
early
them
trading.
young.
Yeah, start them young. Okay, next, market risk. Do you think that stock market or direct stock investing is an asset class? Volatile, less volatile, more volatile compared to the other asset classes?
I think it's less volatile than real estate, but should be the same volatility as unit trust.
Okay, I just hope I heard you correctly. You're saying that stock market is less volatile compared to property, but
Yeah.
almost the same as unit trust.
Yeah.
Why did you come to that assumption?
Because unit trust is also investing in stock. It's just that a third person is helping you to invest.
I see. So you're thinking that, but you compared to real estate and you said it's less volatile than real estate, is it?
Yeah.
Oh, okay. Can you explain to me your understanding of volatility?
The fluctuation of the price.
Okay. And you say it's less volatile than property.
Oh, sorry. I got it wrong already. It's the reverse.
Yeah.
Sorry.
No, I just hope I didn't understand you correctly. I understand you correctly. Okay, so is it less volatile or less volatile or more volatile compared to property?
More volatile.
More volatile. Okay. Next, in terms of control, property versus stock versus unit trust, do you think stocks you have more control over it yourself?
Yes, I believe so, because you are managing it yourself.
Okay.
So you can decide when you want to go in and when you want to come out.
Okay, great. You heard of the T+2 system?
No.
Okay, so when you buy a stock, do you immediately get the stock?
I'm not sure.
Good. Never mind. It's okay. So in the past, the stocks you do not need to have the money to buy the stock, Salene.
Oh.
You want to buy the stock. Let's say you want to buy company A and it's like 50,000 ringgit lah. That means maybe 5 ringgit multiplied by 10,000 shares. You want to buy 50,000 ringgit. You will only need to settle it on the 7th day, T+7. Transaction day, you buy the stock. 7 days later, only then you need to come out with the money to settle.
Oh.
So now it's T+2. You can buy the stock, but you need to settle it only 2 days later. You need to settle. So when you sell, similarly, you only get the money for your sell of the stock 2 days later. It's a T+2 system. In the past, used to be T+30. That means you can owe the broker 30 days or more. Yeah, crazy, right?
Yeah.
Besides, some people, what they do is this, Salene and Louis, I don't know if you heard of this, is they play contra. So what they do is they buy this, they buy a stock 20 cents and they hope that it goes to $1, okay, 5 times. So you only need 2,000 ringgit to buy 20 cents, 2,000 ringgit to buy 10,000 shares, okay? So they come out at 2,000 and they don't even come out at 2,000. They bought it at 20 cents. And then it's T+7, let's just say T+7. 7 days later, the stock went up to $1. So you don't cough out any money, but then you already made like 5 times the money. Yeah, or you put 2,000 ringgit, but then you make 10,000 back. So it's like, yeah. But that's when the stock goes up. What if the stock comes down? Because you have 10,000, you have 10,000 shares. It comes from 20 cents, it becomes 1 cent. Then you still owe the broker, because now it's like 1 cent versus 20 cents, Yeah, but you have to pay 7 days. If not, they will force sell and they still ask you to pay.
Yeah.
Yeah.
A lot of people also lost a bunch of money back then to the contrast.
Yeah, because they only think that the direction will be up. They never think when the direction is going down. You don't need money to make money, Salene. That was the days, during the days. Crypto also can. You can buy crypto and leverage one, Salene.
Really?
You can 10x. That means what you do is you buy Bitcoin. You only have money to buy, let's say, 0.5 Bitcoin. But you can 10x. That means you buy 5 Bitcoins. Leverage. You borrow money from the broker. And then you trade. But don't let me teach you all these bad habits. Okay. So control. Okay, next. Maintenance and upkeep. Do you think you have a little bit more or a little bit less upkeep for stocks?
Less upkeep.
Okay. What do you think the upkeep for stocks will look like? What do you need to maintain?
Maintain your account.
Yeah, okay, good. Portfolio accounting to make sure did I buy the right price? Did I sell the right price? Did I make money? Okay. Next, diversification. Do you think that stocks offer you that diversification or not?
Yes, because you can invest in different companies at the same time.
Okay, Great. Next, leverage risk. Last one. Do you think I just told you how to leverage, but do you think that normally if you only use money that you have, do you think you have a leverage risk as compared to property?
No.
Okay, good. So, Louis, any questions or any thoughts on stocks?
I think among all the different kinds of asset classes that we discussed so far, it does sound like you have a bit more of the graphs about what you need to understand with property, right? But how about stocks? Like, what kind of information or knowledge or skills you think you need to get started?
For stock, is it?
Yeah.
I'm an accountant, so I usually see their accounts.
Ah,
I only know how to read their accounts, so I don't know how to read their other stuff. So I
yeah,
cannot really understand what's the company's prospect, how they want to move and everything. So I only looks at numbers. Like
I see.
yeah.
That's a great question, Louis. And yeah, what else do you think you would need besides accounting knowledge?
You need to know how to see the market, how they fluctuate up, what news affect what news affect the company, and how it affects their share price and everything.
I see. Where do you get that assumption? Is it from your friends or is it from from your parents? Your parents, I remember in the last episode, you were sharing with me they don't invest in stocks, right?
Yeah.
What's their perception about stocks?
They like to say it's a scam.
It's a scam.
It's a scam.
That's interesting.
Yeah. Why did they tell you the reason why from their perspective?
My dad like to say is like EPF, they hire a lot of investors. Then the return they give to their shareholders, the EPF contributors, is only 5%. So how much can you invest in stock to get more than 5%?
That's actually a very, very prudent way of thinking. And I think it's a very good way to think. But maybe scam is going a bit far.
Yeah.
But I think
he just like stock certain needs.
the nuance of it is probably like, this is a better like investment, right? Like putting it in EPF.
Yeah.
So like besides like looking at the charts and seeing like how news impacts the prices, like anything else you think as an investor of stocks you need to know?
You need to know not to invest in the same industry, like in the same company. So if that particular industry is going down, means all your investment, everything will drop.
Okay, so the industry. How about the companies themselves?
The company, I'm
So you
not
have the
so sure how.
financial statements, right? Then outside of the financial statements.
Because when you see the financial statement, you only see about the past result. You can't even see the future result. Maybe you can see through their budget, whether they have budget, the statements and everything. But the information is open to everybody. So if they think it's good, then everybody already buy it.
That's very interesting. I'm sure like John thinks very differently regarding what kind of skills you need. So what do you think, John?
Rather than not do it justice and trying to concise everything here, I think my objective for this particular episode is actually just to tease out what are the assumptions that is surrounding Salene, and then from there, then we can try to like guide her with because I think of Salene like a blank sheet of paper right now, which is good, white piece of paper. Yes, there's some influences here and there, but at the moment, she's not picked up some bad habits. Because like I've trained close to 7,000 people, Louis and Salene, and I can tell you, the remisiers, this is the best one so far. You know, I was in Penang training about 200 reminders, Salene. And midway through, I was telling them this is the right way to invest, buy for the long term, whatever. One of the aunties, the older ones, right? You know, the bursa should be fair to us. You know, last time we used to make this kind of money. I said, yeah, but have you evolved? No, I couldn't hantam nicely because she thought I was the bursa. Then I said, if your clients trust you and they continue to broke and deal with you, right? I'm very sure if with additional skill sets like property, like portfolio allocation, teaching your clients how to read financial statements, evaluate, and you make them money, do you think the clients will run away? No, right? I know some brokers, but they are minority. I know some brokers they always think for the client. So they're willing to sacrifice short-term kind of gains through commissions, and then they think long-term for the client rather than trying to get them to trade in and out. They say, hey, you buy this, you keep for the long run. I know some brokers are like that, but very, very rare. Very, very rare.
Rare.
Yeah. So the skill sets that you need, right? The reason why it triggered me to bring this up was because, you know, the question you asked, how do I think about how Salene thinks? I think that requires a journey that we bring Salene through, and then when we get her to invest her own portfolio and we monitor it through this episode. I don't know, Salene, are you interested? We put in real money, and then we guide you, and then we. I think the first milestone I want you to achieve is getting your first dividend check. Actually.
Wow.
I also want that.
You get a dividend check, and then you say, oh, actually, investing in Penang, we say Hokkien lang say, si pian lang lui lah. You know, if you do it right, it's actually you can make real money one actually.
Then you see your family again.
Yeah.
Yeah. Actually, there's a joke I told Louis many times before also, that I started managing money for my parents, and my mom was very skeptical. But when my dad started getting checks from Nestle, she called me and asked me, John, what to do with what to do with this check? I said, oh, very easy. Just bang in the check for that and ask your friends to drink more Milo lah. It's actually very, very simple. So if you understand the nature of the business, and then you believe in what they do, and then you see growth of the company, you know, like what you said, you can't predict the future, right? Actually, will you be interested to know that you can kind of predict the future for a company?
Yeah.
You can actually predict one, you know, you wouldn't see it from the accounts because accounts are reported the year before.
Yes.
But I can show you some ways that you can actually kind of predict what is the future for a company one. Not through private or insider information, through public information. We'll be interested to learn this skill or not?
Oh yes, of course.
Finally
unlock the secret key.
Yeah. Actually, there's a lot of, especially Western companies, right? You'll be surprised. They actually divulge a lot of things to tell you what is their future profit one.
Oh.
But you have to know how to read in between the lines and not from one source. You can kind of predict one, actually. Kind of predict. Yeah. So, last but not least, definitely something we can discuss. This in an ongoing discussion. And then I think the next episode, I want to get you started your journey on opening an account. Okay, maybe a fully online one like Rakuten or whatever. And by the way, Rakuten's not sponsoring this. So the reason why I say Rakuten is because from what I've heard from other people opening, it's the easiest to open purely online. You don't need to go to a branch. And all that. I don't know the other guys whether they still do that. I know my Hong Leong, I still needed to go to a branch to open it up. But you know, why don't they make this the next assignment, Salene? Try to find out which one is the easiest for you to open and which is the hassle-free. You talk about the brokerage fee and everything. In Chinese, we say 大同小异 lah, almost the same already lah. It's not going to be a very big difference, especially online trading. Okay, so we use the next episode. We're gonna go through how to open an account and all. Right?
So I guess just to wrap things up, I wanted to just ask Salene some questions. Since
Oh.
we have gone through everything that.
Oh, not yet. We have one more, Louis. One more.
Oh, one more
Crypto.
asset class, is it? Oh, okay,
Crypto.
Okay.
Yeah. Let's go through this one really quick. So
Yeah.
crypto. Upfront allocations, I mean, big or small?
Small.
Okay. Learning curve?
Around medium.
Medium.
I feel like it's close to small.
Close to smaller. Okay. Why? Because just have to look at charts, whether it's going up or going down, is it?
Because it's like very fast paced.
Okay. Liquidity. Easy to get in and out?
Yes.
Okay. What makes you think so?
It's easy for you to go in, but maybe to get back your investment is a bit hard.
Okay.
Because
What makes
very high volatile.
okay. Do you think there's any professional management and fees involved in crypto?
I think it's when you want to buy crypto, the crypto money.
The conversion from
Yeah.
your normal ringgit or US dollar into
Like
crypto.
the exchange rate.
Okay, the fees. Okay, good that you read about it. Market risks, volatile, non-volatile,
Very high.
very high. Okay, good. Control.
You can control, yes. It's your own investment. You can control yourself.
Okay, maintenance and upkeep.
I don't think they have any like. I think it's very minimum maintenance. It's only you have to pay like fees when you want to take out exchange back to ringgit or anything like that.
Yes. Okay, good. Diversification.
Diversification, I think, is very low because you still diversify into crypto.
But you can buy many coins, different kind of coins.
But they are still in the same industry, I feel.
True. Same asset class. Okay. Last but not least, leverage risk.
Low.
Okay. If you don't take leverage, yeah. Okay, Louis, your questions.
Yeah, so again, a question about skill, right? So with stocks, we discussed about like some financial statements, understanding the industry, etc. What about like crypto? What do you think is the skill people need to be to make a lot of money in crypto?
I don't see. I got few friends that is actually making a loss in crypto, but I still got a friend that is profited from crypto. Somehow he managed to earn before the market crash.
So what do you think? Is there actually
Skill or
some
luck?
that people can?
I feel
skill
like it's just lucky that he somehow managed to sell it off before like the market crash or something like that. You know, it's usually the price will go up, then maybe they feel like, oh, it's already high enough for me. So I sell it off. Then see the next day, market crash.
And you know, I'll share with you I have some friends very, very bullish in crypto. They work in crypto startups. So during the high time of crypto, he was very, very vocal about buying NFTs, you know, the penguin. And I don't know if you know the penguin. So like at one point he was sharing on Facebook, oh, I bought this penguin NFT. It's worth 44,000 ringgit. Yeah.
Wow.
But so imagine after the crash, right? Completely gone from Facebook. Yes. So at that time during the rise, the bull market of crypto, wow, he was always like saying like
Crypto
expert.
is good, this and that.
Yeah, like he had many expert takes about crypto. Oh, blah blah blah. This is why crypto is gonna be forever, you know, blah 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 blah. Many like insights, you know. And I think that at that time, because the prices were going up, people did follow him for that, you know. And suddenly, right, when the market crashed, he just went missing. And to me, right, it just goes to show that actually he doesn't actually know much. Because right, for the investor who understands like that asset class well, for example, stock, right? They get it. They get when it goes up, when it goes down. They can explain like bull markets, bear markets. They understand and they know the cycle very well. But
Yeah.
with crypto, right, nobody can say, oh, this is
With conviction.
conviction and say, like I'm just standing here to say that. A lot of proponents of crypto back then, you can see actually during the bull market, many YouTube channels started for crypto. Now all no updates until today.
Yeah.
Because no, they can't explain why they cannot without like massive backlash from their followers. So
Yeah.
a lot of them just like went silent. So that was an interesting observation. I actually thought that they might actually understand, until the crash happened and everyone went radio silent. I was like, oh, actually nobody understands.
Can I give you a macroeconomic perspective of why crypto existed and why it was a bull market?
Yes.
Okay. This actually goes back to what US did with quantitative easing. So I don't know, Salene, you've heard of quantitative easing?
No.
No. Louis?
Yes, because we have this podcast lah.
Oh yeah, I explained this in the podcast before. Okay, yeah. So Salene, quantitative easing is virtually the government's printing money in the hope of the money supply going out to the banks, to the people, so that they can spend to make sure that the economy don't collapse. Okay. Within the 1 year when COVID struck, within the 1 or 2 years when COVID struck and the share markets came down and all that, right? And within the year of 2008, when the global financial crisis actually happened, the US printed so much money to the tune of trillions of dollars that there was what we call easy money being spread out. So when you have easy money, what happens?
The value.
The value reduces, but the rich and the people who had means to get this money through loans or whatever, interest rates was very low, they started speculating on a lot of assets. So it's not just crypto, it was the private equity markets, it was everything else. And what happened is that because there's so much money in the system, is sloshing around. That's why there was a bull market for crypto, there was a bull market for PE and NFT. But what happens? The moment the Federal Reserve starts tightening credit, meaning they don't print as much money, they actually increase interest rates, what happens? People get scared. No more money already, ma. There's less money in the system. And this is actually one of the precursors to the crash of crypto, because not enough money to go around already, ma. Everyone already pulled back already, ma. So the mania is gone, you see. The money is gone. During the hype, right? Obviously, interest rate is, if you're a rich person, right? Most people, they love it when interest rates are low. Why? I borrow cheap. I can make, let's say, 20%, but because it is on borrowed money, I actually leverage, I make even more, You see? Yeah, but now I want to borrow 5%, 6%. I better think twice, because I have to make sure I can make 10% because my interest rate is already 5%. I have to make sure that I can make that, But if interest rate is 1% or 0.5, hey, I make 3%, I already make money already, you see?
Yeah.
Yeah, so actually it's a function of interest rates, money supply, and all that lah. And like what Louis said about all the experts now gone. Yeah, in an age of easy money, everyone's an expert. It's only when an age of difficult money, high interest rates, high inflation, that's where the real money is being made lah. There's real money being made lah. So was that clear to you, Salene?
Yeah.
Yeah, because nobody can predict COVID, right? That's the thing.
Yeah. At this point, Salene, do you have any questions for me?
Yes. We talk about unit trust. Another one is ETF.
ETF.
What do you understand about it?
Based on my understanding, those two are the same, but the only difference that I can find is that ETF you can manage more than unit trust. Okay. That's why I'm confused between the two.
Great that you brought it up. I nearly forgot. So a unit trust is usually issued by a fund company, and when you buy and sell through the fund company. So I'll give you an example of maybe one that is very big in Malaysia. The biggest, by the way, is Public Mutual. Okay, so if you buy Public Mutual Fund A, you cannot sell it to anyone else. You have to sell it back to the same fund.
Oh.
You cannot go over to Afin or UOB Kay Hian or whoever lah. Like your Malay friends, your Muslim friends, they may be able to buy Amanah Saham Bumi Putra ASB, right?
Yeah.
ASB or ASM lah, Amanah Saham Malaysia. They cannot take ASM and go to public mutual and say, can you buy my ASM? You can't. You have to sell back to the same company.
Oh.
Okay. So that's one big difference to ETF. Now, ETF is different. ETF, most big ETF, the Malaysia, there is some ETFs, I think about 20 over ETFs, not as many as the US are. So an ETF, you go to another fund company like a Vanguard. Okay. Vanguard is one of the early adopters of ETF. Okay. Actually, Jack Bogle was the founder of the ETF. So what they do is they take an index. So what is an index, you will ask? An index is something like the S&P 500. I don't know if you heard of the S&P 500.
Mm-hmm.
S&P 500 is the Standard & Poor's 500, the top 500 companies by market capitalization in the US. Okay, they create an index that says, okay, Apple is number one, Microsoft is number two, whatever lah, based on the size of the company. Okay, let's say because it's the largest, so it will take 20%, then 10%, whatever. So there's an index. And an ETF will say, okay, I will follow this index and I will make it into a basket called a S&P 500 ETF. Okay. So when you buy and sell an ETF, you don't actually need to go to Vanguard. It's actually sold on the stock exchange, like a stock.
Uh-huh.
So when you buy, you log in, let's say you log into your Tenaga or your Hong Leong or your Rakuten, whatever, you can buy the S&P 500 index ETF from the market. You don't need to go to a specific company to buy it. You just buy it from the market. It's like buying a stock.
But how is it different for a stock now?
In the stock, you only buy equity for one company. But in ETF, you're buying a basket of 500 companies.
Oh, it's basically like a basket full of other companies like that.
Correct.
Oh, then you're like buying the basket.
Yes, you're buying a basket. So like unit trust, you're also buying a basket, but the basket is created by this fund management company of asset management company. You have to buy and sell to that company alone. It means you cannot, if it's PNB who does an ASM or ASB, you have to buy and sell to that public mutual, Affin Hwang. But an ETF, it may have been created by Vanguard or BlackRock, one of the largest in the world, right? But it's bought and sold on the open market in exchange. So the basket, both are baskets, but one is being sold from the asset management of fund company, one is sold in the open market, like a stock.
Oh, so basically in ETF, you can buy the basket and then sell to other people.
Correct. Yeah, you don't necessarily need to go back to Vanguard or BlackRock or whatever. You just sell it in the open market.
Oh.
And it's much cheaper. So like just now I told you, unit trust, you pay 5.56% sales charge, and then AUM about 1 to 2% every year. ETF tada, nothing. You only pay for brokerage fees. You don't have an AUM fee. There is a small asset, they call it a management expense ratio for the fund. It's usually 0.1 to 0.2%. Okay. And it's very low cost. There's no sales charge, just a brokerage fee that you pay. So a lot of people, that's why Warren Buffett advocates that a lot of people who don't like to study financials, don't want to take the risk of buying individual stocks, just buy an ETF. The problem is in Malaysia, our ETF selection is very, very small. It's only about 20 or less, if I'm not mistaken. Yeah. If you want to buy an ETF, you will very likely you're much better off buying an S&P 500 ETF or a US-based ETF, put it this way. Very well diversified basket, 500 stocks, but you also have the risk of currency exchange, risk of Forex, because you're buying US dollars. So like stash, I'm pretty sure you heard of stash away, riskiest, all that, right?
I heard of stash away.
Okay.
But I don't know what is it.
So stash away, what they do is this. You put money into stash away. Inside that money, they help you select ETFs. So they will buy 1, 2, 3, or even 4 ETF based on your risk profile. You say if you want a very safe one, then they buy the safe ETF, and then they charge you a fee on that. Yeah. So
it's basically a hybrid between unit trust and
correct.
ETF.
Correct. Then when you want to sell, you have to sell. You have to sell back to Stashaway lah, because you cannot buy and sell from the open market. Ma. You're buying through Stashaway. You're selling also through Stashaway. It's in an enclosed platform. They will help you choose the ETF. Whereas if you buy ETF directly, you go log in. It's like a stock, but you're buying a basket of stocks.
Oh.
Am I making sense now?
Yeah. Stashaway is like the unit trust of ETF.
Yes. Yes. That's right. I think you hit it on the nail. Correct. And they charge you quite a bit, because they charge you about anywhere between 1.1 to 1.5 over and above. So the fees are almost like unit trust already. But it's actually a low cost ETF. Yeah. I hope I provide very much clarity to your ETF and unit trust.
Now I finally understand the difference.
Yeah. Not easy to understand, right? When you Google and you start reading, right?
Yes.
Yeah. Louis, any questions, comments?
I think one asset class which I don't know, we actually just did a podcast around gold. So as someone who actually saves a lot of money, right? What do you think about gold? Your parents buy a lot of gold?
No.
Is it in your radar for consideration at all for investing?
I mean, I have relatives who invest in gold, but I don't really understand why they invest in gold.
But
because gold, you also it's like currency, but in a different currency. They see the price of gold. Maybe now you buy for like 5 ringgit, example. Then it's a very long-term investment for me. Gold is a very, very long-term investment.
Yeah.
Not something you're interested in, basically.
I mean, if you buy a physical gold, you keep in your house. What if like a burglar come in and then take the gold away? I mean, I know now there's a digital gold where you can just buy a gold, but you don't actually have to hold the physical gold.
Paper gold, yeah. Okay, I was just curious because usually, right, a lot of people who save a lot of money, they're quite big about gold as well, because they think about it as like a safe investment, as safe as like savings, or like sometimes they think, what if something bad happens, that kind of thing. Yeah. Okay. And anything else before I wrap things up, and then we maybe
I think it's probably a good time to wrap up as well, Louis. Okay. Maybe you give your final thoughts.
Yep. Okay. So, Salene, just curious after listening to everything that John has explained, and going through all the thought process that you have had, right? What did you find the most surprising about this asset class?
Would be property and unit trust because of their high maintenance fees. Yeah, I didn't know that property has so much like lawyer fees and everything. Then unit trust, you got a lot of like the asset management fee. I know there's a fee for unit trust, but I didn't know it was that much.
I think a lot of people don't know that actually. So the next question is like, have your thoughts about investing changed so far? So you started off wanting to invest in stocks, right? You still want to invest in stocks, and is there anything else you would like to add to that?
I would prefer investing in stock, maybe through ETF.
So before this call, you didn't think you would invest in ETFs, is it?
Yeah, because before this, I don't know what's ETF until I go search about the asset classes that I found out about ETFs. Then now I understand more about ETF. It feels like a safer option.
Like something that would fit your risk appetite, right?
Yeah.
That's a very interesting. We can already see through one call, the thought processes that have changed, some of the misconceptions about investing that have been addressed so far. So do you feel more confident about taking your first step now?
Yes, definitely.
That's really good. So, John, you were saying like we should get Salene to research, right? Which is the to open online. Okay, so that's your first homework. So the next call, what will we do? Should she open the account already, or we do it? Because sometimes, right, you have to go through a verification, which takes some days.
Yeah. So I also, the other thing is I'm worried that if we share the account opening process online live, we cannot blank out her private details. So I rather that she research. We talk about the journey that she is going through researching all these different brokers, and then in the next episode we said, oh, okay, we point out her research. Hey, broker A versus broker B versus broker C. What's a good thing? What's a bad thing, and all that. And then after that, get her to document her journey. Then she can mask out all these private details, and then we show people through the journey in the subsequent episode again. I think that will be quite fun. Yeah.
Yep. I think so. I mean, are you excited, Salene?
Yes, I'm excited.
Yeah, we're so excited as well. I think I mean personally I would love to see your transformation 1 year from today. I'm
Yeah.
definitely taking that first step, wanting to do it properly takes time. We're not here to rush. We want to make sure that you do everything properly, and at the end of it, right, you make some money and grow in terms of your portfolio to include more assets outside of fixed deposits. Okay. So just want to thank you again for your time. I know it's a work day, you have a meeting. Thank you so much for taking this time. I tell you, so many young people will benefit from you just sharing and following us through this journey. And thanks, John, as well, for taking the time to share with Salene everything you know. And thanks to the audience for joining us in this show tonight. Thank you all so much. If you like content like this, make sure to like and subscribe. Bye-bye.
Bye-bye.
Bye.